Hi everyone, in this video I will focus on just one topic. Meta at this level, there could be a shorting opportunity in another day. I know some of you may not believe it. Let's go over the key details. I will give you the main points. The biggest reason is this: Meta's monthly and weekly charts. On the monthly chart, you can see heavy resistance right here. The pressure is very strong. Monthly resistance is high. And not only that, on the weekly chart, same thing. On the weekly, there's strong overhead pressure. With this much resistance at this level, it's going to turn. It's going to head lower. And if you look at the daily chart, you will see it's even more interesting, right? We just had a big bearish setup. But when yesterday we got a bullish engulfing candle, and that engulfing candle stayed above the intraday VWAP all day, which looks really strong. A green candle right after a red one. So is there room to go higher? Not really. That's not the case at this level. More upside is unlikely. Why? Because the daily chart is still subordinate to the weekly setup. And on the weekly chart is facing huge overhead pressure. That kind of resistance can't just break in one shot. That means a pullback is needed first, and then it can attempt another breakout. And look at this area here. Let's check it out. Besides that, let's also look at the 2-hour chart. In this zone, it's hitting resistance, and most likely it will open high and fade. On the 1-hour chart, it's also looking weak. On the 15-minute chart, still not great. The level is still not convincing, so be cautious. And then on the 5-minute chart, it looks strong for now. And it's gapping up pre-market but facing this resistance level. That's a pressure zone. That's a level to watch. Here, let me show you. On the 5-minute chart, you can see this big arc forming. Looks bullish at first glance. And how did it do that? With a gap up. That pre-market jump cleared overhead supply. That's how they took out trapped longs. A straight gap up wiped out trapped positions. And after that, it will probably chop sideways, then pull back to shake people out. And then what? Then it's likely going to choose a clear direction. And what direction is it going to pick? My bet is most likely lower. That's my view. When it breaks, is it up or down? I believe it's going to break to the downside. Why? Because in this move, it ran from 500 up to 700, gaining nearly 40%, almost 50%. That's a huge short-term rise, a very steep short-term rally. So now the big question is, can it take out the previous high at 739.68? And then what happens? It turns lower, right around this level. There are two ways it could go lower. Let me explain. First, it could break the prior high, then drop. Or second, it could head straight down. Which one do you think it is? I'd say this level is where we need to look closer, and this is where we tie it to the broader market. Its chart looks almost identical to the NASDAQ. Here's the NASDAQ weekly. Meta paused for 6 weeks. The NASDAQ also trapped flat for 6 weeks. So can this level still go higher? I'd say the rally is exhausted. It can't just keep going forever. And the NASDAQ is also under pressure, right? Meta and the other big names are all facing resistance. And also, it's late June, a very sensitive period. Why is the timing so important? If it really wanted to move higher, it wouldn't stall this long. That's why there's a saying, sideways too long means a drop is coming. That applies both to NASDAQ and to Meta, and especially for Meta, which is a key NASDAQ component. Looking at the monthly chart, you can see Meta is running into stiff resistance. So at this point, can the market move higher? Not without new catalyst. And to move higher, we need incremental buying. In other words, for this market to rise further, you need a clear logic. That means new capital inflows. And for that to happen, you need rate cuts. And will they cut rates? That's a big question. And although Powell hinted in July that they're ready for a cut, you have to look at the bigger picture. And that is the tension with Iran is unpredictable, and that's a key. The situation there swings back and forth, and whenever tensions rise, even after the talk ceasefire, things can flare up again. In reality, it may just be Trump's wishful thinking. As soon as tensions spike, you have a threat to close the Strait of Hormuz, and as war risks rise, they could move to block the Strait of Hormuz. And if they do, oil prices will spike. And once oil prices jump, what happens next? That's a chain reaction to remember. Inflation will rise again. And with inflation climbing, usually 4% inflation is a serious red line. If inflation hits 4%, the Fed at this point might hold rates steady, but there's no way they will cut. Even if they don't hike again, they definitely won't dare to cut rates. And without a cut, you won't see new money come in. Without new capital inflows, the rally we just had won't hold up. So who will take these shares? There's nobody to buy at these levels. That means it has to drop. It has to come down. That's just how the market works. Make sure you really understand this logic one more time. Whenever conflicts like the Russia-Ukraine war or tensions in the Middle East heat up, especially in the Middle East, oil prices tend to spike. And as oil jumps, even though oil dropped sharply yesterday, that was just a short-term factor. Before a real ceasefire is signed, oil prices will remain highly volatile. Without a formal truce, expect swings, big swings. And don't chase every bounce or every dip. A lot of people see oil drop and assume things will ease up. That's exactly what happened yesterday. But as I've said, you can't just chase price moves, whether up or down. Unless there's a firm truce, no sign of ceasefire, you can't be too optimistic here. If you're too optimistic, you need to remember as long as oil spikes again, you will see names like Occidental Petroleum jump, and that's a clear sign. When oil rises, these stocks jump too, and that drives up CPI and overall inflation. When inflation picks up again, you can forget rate cuts, and the Fed won't dare cut. No chance, no way. Holding rate steady would already be a win. And rates at 4.25 to 4.5% are historically quite high. That's high by historical standards, very high. So at this stage, you need to stay cautious. Cautious what? Of any geopolitical shift that could impact US stocks. And remember this, when conflicts flare, the market opens lower and sells off all day. That kind of action will happen again, and probably often. We will see more days like that. So you have to stay very alert and be very cautious going forward. And don't get carried away. Just because Trump tweets something doesn't mean the whole trend will change. That's impossible. Market trends won't shift just on talk. It takes real capital to move this market. Behind every move is real money and a serious battles between bulls and bears. Don't oversimplify this game. That's it for today. If you enjoyed this video, please like and subscribe. Thank you.